Hello dear children, welcome to another session of your accountancy class. As discussed earlier in the topic, that is accounting for not-for-profit organization, we have discussed about the various financial statements of NPO, namely receipts and payment account, income and expenditure account, and balance sheet. So today we are going to discuss how to prepare the income and expenditure account and the balance sheet from a receipts and payment account with additional information. So what will be the steps that has to be followed in order to prepare an income and expenditure account and also a balance sheet given a receipt and payment account? So here the question will be given as a receipt and payment account and there will be some additional information with it. So using that we have to prepare the income and expenditure account and balance sheet. So the steps that we are going to follow in such a case will be explained in today's lesson. The first step will be, as you have been asked to prepare a balance sheet. So in order to show a balance sheet of a non-profit organization, we need to know the capital fund. So the first step will be to calculate the opening capital fund, Now how will you find this opening capital fund? Because this amount may not be directly provided. We have to find it with the help of whatever information is there in the question. So in this case, you have to calculate the amount of opening capital fund. That means we are going to prepare the balance sheet in the beginning of the year. That is at the start of the accounting year, we have to show a balance sheet in its format, that is with liabilities and assets for the beginning of the year. So that will be the opening balance sheet, you may say. So the opening balance sheet will be prepared, and to prepare that opening balance sheet, you're going to pick the opening cash and bank balance from the receipt and payment account. You will be given receipt and payment account in the question. So from there you will take the opening balance of cash and also opening balance of bank if it is there. Apart from this, you have to also look for some other information relating to other assets and liabilities from the additional information. So the additional information has to be used very with great precaution. Very carefully you have to understand the additional information, because from there a lot of data will be used in preparing this balance sheet in order to calculate the opening capital fund. So once we have preparing that opening balance sheet, with the help of that you will be finding the opening capital fund. You will be entering the various liabilities and assets as the information is provided, and once you balance that balance sheet, once we are going to find out the difference in the two sides of the balance sheet between the assets and liabilities, you'll find the difference will be in the liability side, and that will be the amount of capital fund which you will be taking as opening capital fund. So this is your first step. Moving on, the second step here will be, now you will be looking at the receipt and payment account which will be there in the question. So from the receipt and payment account, first we are going to take its receipt side. So from the receipt side you have to determine the various income that can be recorded in the income and expenditure account. So this is the process of preparing income and expenditure account. So here we are going to take the receipt and payment account, and from there we have to see the various items of income. Now from the various items of income, we are to consider only the revenue income which are revenue in nature. That means only revenue receipts are to be considered. So first of all, those revenue receipts which have no adjustment, means for which there is no adjustment mentioned as per the question, that revenue receipts can be directly recorded as an income, and income will be to the credit side of income and expenditure account. Also the other revenue receipts which may have some adjustments, so for those type of revenue receipts which have some adjustments, we have to consider those adjustments and do the proper calculation with those adjustments and derive the amount which will be relating only to the current accounting period for these revenue receipts which will show some adjustment. And once all the adjustments are taken and the amount of income for such items is found, we have to show that amount again as an income on the credit side. And like I said, we have to take only the revenue receipts in the income and expenditure account, okay, from the receipt and payment account. So whatever the receipts are of capital nature, okay, those will not be taken here because they will be taken in the balance sheet. And when you prepare the closing balance sheet, these capital receipts, okay, will be incorporated there in the balance sheet. Again, in the income and expenditure account, the next part is the debit side, which is the expenditure side. So for taking the items for the expenditure side, you have to determine the items of expenses from the receipt and payment account. Again, from the receipt and payment account, we will be looking at all the various payments, and from those payments, only revenue payments are to be taken. Those payments which are revenue in nature are to be taken. So the revenue payments, again, which have no adjustment, we can directly record in the income and expenditure account in the debit side. Okay, the expenditure is the debit side of the account. But for those revenue payments which have some adjustment, which are affected by certain adjustments, for these we have to take their adjustments and do the necessary calculation for the accounting period, so that we exactly find out the revenue payment relating to the current accounting period. And whatever the amount is found after that, it will be shown as an expenditure in the debit side of the income and expenditure account. And the payments which are capital payments will be taken in the balance sheet. Okay, we should not be taking any capital payment in the income and expenditure account. Apart from these, there may be some items which are not appearing in the receipt payment account, but still we have to incorporate them in the income and expenditure account or the balance sheet. Okay, these are the items which may be there in the additional information, or they have to be calculated separately. So such are the items which are not appearing in the receipt payment account, but still we have to show them when you prepare the income and expenditure account. Some of the examples are here, like depreciation on fixed assets, outstanding expenses, accrued income, loss on sale of any fixed asset, or profit or on sale of any fixed asset. So if there's depreciation on any fixed asset being mentioned, then that depreciation amount will be computed and it will be taken as an expenditure. Means we'll record it in the debit side of the income and expenditure account. In case there are any outstanding expenses, that will be also be taken in the debit side as an expenditure. If there are some accrued income, we will take it in the credit side. These are to be either added or subtracted from the respective income or expenditure, whichever it is applicable to. Okay. And if there is a sale of any fixed asset, okay, then out of that sale there may be a profit or loss. Okay. So if on sale of any fixed asset there is a loss, then that loss will be computed. It may not be given directly the amount of loss. It has to be computed, and the amount of loss only should be entered in the debit side of the income and expenditure account, as it will be considered as a expenditure. Likewise, if there is profit on sale of any fixed asset, then that will be computed and it will be taken to the credit side of the income and expenditure account. Credit side, that is the income side. And remember that whatever depreciation is charged on the fixed assets, the same amount of depreciation has to be also used in the balance sheet. When you will prepare the balance sheet, the amount of depreciation has to be deducted from the fixed assets in the balance sheet. So these steps were for preparing the income and expenditure account. Okay, once all these items of income and expenditure have been recorded and the additional information has been taken, then finally we'll find out the result of the income and expenditure account. Now, as it is told to you all, income and expenditure account is prepared with the purpose of finding out the surplus or the deficit. So from the income and expenditure account, you are going to find out what is the amount of surplus or deficit for the non-profit organization. If the income exceeds the expenditure, it will be a surplus. Whereas if the expenditure exceeds the income, then that will be, the amount will be deficit. That is, if your credit side is heavier than the debit side, that will be surplus. Whereas if the debit side of the account is heavier than the credit side, it will lead to deficit. And the same surplus and deficit we are going to use further in the next step. And the final step here will be to prepare the closing balance sheet. You will prepare the closing balance sheet as if it is asked in the question. So to prepare the closing balance sheet that is prepared at the end of the accounting year, you're going to take the various opening balances of assets or liabilities whichever are available from the question, okay, and also the opening capital fund which you have calculated in the first step. Okay, the opening capital fund that we have calculated in the first step will be used while preparing the closing capital fund, and to this capital fund you're going to add surplus or deduct deficit if any. And apart from this, you also take the various adjustments which are going to affect your assets and liabilities. That is, if there is any depreciation on assets, that has to be deducted. If there is any accrued income or outstanding expenses, all those have to be recorded in the balance sheet in the appropriate site, whether it's asset or liabilities. And after all the items are properly recorded and correctly recorded, then you will be totaling the balance sheet and to see that it tallies. And as your balance sheet will tally, your job is done. The financial statements of the non-profit organization preparation will be completed out here. So you can go through the various steps once again. The first step will be to calculate the opening capital fund. This will be a separate balance sheet that you will prepare. Then from the second step onwards, you are going to start preparing the income and expenditure account, where first you are going to take the various items of income in the credit side, and there you have to only consider the revenue receipts. Revenue receipts will be taken as income, not the capital receipts. Then in the debit side of income and expenditure account, you're going to consider the various expenses or expenditures, and there you're going to only take the revenue payments but not the capital payments. And those items which are not appearing in the receipt payment account but given as an additional information will be also incorporated when preparing income and expenditure account, like depreciation, outstanding expenses, accrued income, profit or loss or on sale of any fixed assets. And once this all recording has been done, you are going to find out the balance of income and expenditure account, which will be either surplus or deficit. And after finding surplus or deficit, we will then prepare the final balance sheet or the closing balance sheet. And as you see the balance sheet tallies, the steps are completed. That's all for this lesson. Thank you all.